rate. This is a video teleconference, a public hearing for a tax rate. Clerk, call this meeting to order. Let me read this statement. This public hearing is being held today, Thursday, September 1st, 2022, for the purpose of obtaining citizens' comments from the public regarding the proposed tax rate. The tax rate levied last year was 18.5 cents per $100 and produced revenues in the amount of $6,566,951. This year's compensating rate is 17.7 cents per $100 and will produce revenue in the amount of $6,641,314. The Franklin County Fiscal Court proposes a tax rate of 18.4 cents per $100, which will produce a total of $6,903,965 in revenue. That 18.4 cents is 0.1% cheaper or lower than last year's rate, so that we are proposing cutting the rates and taking the 4%. The revenue expected from this new property is $63,989. Revenue expected from personal property is $1.299686. Revenue expected from the motor vehicle is $698,026. And revenue expected from the watercraft is $21,965. Revenue received in excess of last year's revenue will be used for the county employment retirement system. We have in our meeting today, Treasurer Susan Lawrence. And Susan, would you do you have some information to share?
Yes, Judge. And as the judge pointed out, by statute, we have a format for presenting the information to the public, and we're also asked to identify how the excess money would be used, and our proposal would be used to help cover the county employee retirement benefits. And I'd like to share an example of why that's necessary. And I have a chart. Are we able to see this on screen?
Yes.
Okay. This is a history of the retirement expenses for Franklin County Fiscal Court back to 2011. As you know, Franklin County Fiscal Court services include not only our general fund services, but also our road department, our jail. We also have a countywide fire service, and retirement is included for our firefighters. It's also included for our county clerk's administrative office and our county sheriff's office and all the deputies. And so our retirement expenses include a considerable amount of hazardous duty employees. I think it's over 100, or more than half of our staff is on hazardous duty retirement. So Franklin County Fiscal Court has a large retirement bill, and as you can see, it has doubled basically since 2000, almost doubled since 2017, and it will continue to increase based on the state statute regulations. As you can see, we had a slight reprieve during COVID based on the legislative action during that time, but the trend is obviously upward, and it is a function not only of the rates set by the state for our contributions, but also based on payroll. And as everyone knows, the payroll figures are increasing due to not only higher rates of pay, but also expanded staffing levels for law enforcement and other functions. So this is a specific area that the additional funds would be targeted to help cover the increased costs in our retirement expense. The budgeted increase, I believe, was around almost $400,000 just for this year. So that would be the increase in retirement budget is greater than the additional revenue that will be generated from the proposed tax rate. But as the judge pointed out, that this is a situation where we have a rate that we can take this year that is less, that is a decrease than the rate last year. So we have a rate decrease. So many of people will have a lower tax bill than last year because of that rate decrease. And we can still generate additional revenue. So it's a situation that provides an opportunity to fiscal responsibility and still help the citizens maintain a reasonable standard with their property tax input.
And Susan, I believe you can attest that this is the second year in a row that we've been able to cut taxes. And
Yes.
gain additional revenue. This is actually the 5th year in a row that we have either kept tax rate the same or reduced them.
That's correct. That's correct. And one of the things we have been experiencing here in Franklin County is a catch up, if you might say, of our property tax assessments. Our PVA has done an excellent job of getting all those valuations updated and up to speed and more reflective of what the actual is, and in both the commercial areas as well as the residential areas. So that update in our assessments has helped us lower the tax rate that we are able to take and still have additional revenue.
Okay. Susan, just while we're on and in talking with the public about this, when you said revenue expected from new property, let's talk about that a little bit now. What exactly does that mean? Does that mean like new homes being built, or what does that mean when you say new property on the revenue expected?
Well, it would include both commercial as well as residential new property. So both of those items are wrapped in the new property could be both in the city or the county, because the county encompasses our whole community for the purposes of this particular tax. So the real property additions are again managed by the PVA office, and we don't show a lot of new property in our system as far as the revenue as a percentage of our total additional revenue. About 22% of it will be coming from the new property growth. So we don't have a whole lot of new property on our books to help offset the increase. The more new property you have with developments, you're able to grow your tax base and not really it doesn't impact the rate. You can have additional revenue growth without having pressure on the rate by the way the formula works. So new properties is a good thing as far as this calculation goes.
Good. Okay. All right. Do you want to explain now the difference between personal property, what personal property is, being homes and motor vehicle, and then watercraft? Can you explain that while we're just talking to the general public?
Sure. I'm going to bring up another, I think, a worksheet that might be helpful to see the the distribution that we have in our assessment valuations. Let's see here. But on the, as far as personal property goes, the tangible property is as far as the topic goes of something current. The tangible property includes what we're calling the barrel tax. So people hear barrel tax, but that is really a classification of personal property. So that, that concept, maybe that'll help shed light on that concept. So when we set a real property tax rate, then we also, that in turn by formula helps determine what the tangible tax rate is for personal property that will be applicable for that year. So one affects the other. You don't necessarily set them independently. The information that I show on the screen now, as far as our certified assessments and some of the areas of growth, you can see with residential property from last year, we had about a 6% increase. From farm property, well, it was a 5% increase, commercial property 4%, overall about a 6% increase. It's worth noting too, this item of property that's exempted in Franklin County. As the capital county, we have, certainly have a lot of opportunities, but we also have a lot of responsibilities, and a lot of our ability to respond is hampered by the fact that so much of the property is exempted from the tax rolls, so because of state property exemptions. The other area, as far as revenue that is discounted or foregone, is we have an older population, so we have a considerable value of homestead exemptions. But this my first year will have benefit from that homestead exemption. So for those taxpayers who are 65 this year, you have the opportunity to defray, I think it's the first 39,000 of your property value. That number gets changed, can get changed every year. So I'm not exactly sure if it's 39 this year or 38 or 39, but contact the PVA office for that opportunity for a discount on your property taxes. It's significant, and it does provide a healthy discount for you by exercising.
Two caveats to that we ought to say.
Yeah.
One, you must be 65.
Yes.
And two, you must reside in the homestead.
Well, correct. Yes. You need
Maybe
to
a
do
rental home or whatever. It must be your full-time residence.
right. Also, this the information I have tallied here shows basically our number of parcels. So you can see with this comparison for residential units for 2022, we've got 19,552 residential units. So what is about a 70 unit increase from the prior year. Farms, we have 2005 farms versus 1997. So a small number of additional farms. And commercial properties, you can see we have 7 new commercial parcels. So overall, the majority of our increases have come from the residential area as opposed to the commercial area. So this tally right here again is for the entire community. This encompasses both the corporate and unincorporated areas of the community. So it helps us to see, where we stand in relation to, of course, and what kind of pattern we have for growth or not. Any questions, or do we have anyone in the,
We don't have anyone in, let's check. Andrew, is there anybody online? Is there anybody in a box with questions? Andrew Tippett?
Yes, I'm checking now, Judge. I don't see anything right off the top of my screen, but I'm checking several places here. Yeah, I'm not seeing anything.
Okay. Susan, let's recap, if you would, what we're proposing to the community, to the fiscal court tonight, which will be the pleasure of the court, but we are proposing, if you would, recap it again.
we are proposing a rate of basically $1.84,000. So depending on the value of your home in thousands or hundred thousands, you can, if it's $100,000 home, your tax bill would be $184 and be $1 less than last year. And if you're homestead exemption, then you save another $38 or something to that effect. The rate that we select, recommend, the $1.84 per thousand, also helps determine what the personal property tax rate is that corresponds to that. And that rate would also have a slight decrease from the prior year as well. So both the real and the personal property tax rates would be going down, and it would still result in additional revenue for the community through fiscal court receipts.
Okay.
And the motor vehicle and watercraft rates would stay the same.
All right. Andrew, do you hear any more comments? In any form or fashion, video, written?
I don't see any comments, Judge.
Okay. Being 4:20, there's no one else in the room, and Susan's comments, I'm going to declare this meeting, public hearing for September the 1st concerning proposed tax rate closed. Thank you. Thanks. If you were watching, thank you very much. Appreciate it. And Susan, thank you for your presentation. And once again, if your community is growing, your tax rates can get smaller, and that is just, it's clear that that's happening, and we're very proud to once again propose a tax rate that is less than it was the year before. Cutting taxes and trying to gain revenue. Very helpful to the community. Thank you for watching. This meeting is adjourned.